Hi everyone, so welcome back to the audit series, and today's topic will be our controls, that is entity level control and activity level control, and after that preventive control and detective control. So to begin with the entity level controls, so controls that are designed to address the risk that relate pervasively to financial statement as a whole and potentially affect assertions. So entity level controls are those controls that impacts that affects the financial statement as a whole at all the levels of the financial statement as a complete financial statement. Those controls impact. So few of the examples of the entity level controls would be control related to the control environment, controls over the management override of the controls, the entity's risk assessment procedures, centralized processing and controls including shared service environment, controls to monitor other controls like the internal auditors, controls over the period end of the financial reporting process, programs and controls that address the significant business risk. So these are few examples of the entity level controls because these impact financial statement as a whole. Now the activity level controls are those controls that are that generally address the risk related to the specific areas of the account, maybe transactions or certain balances or disclosures or assertions. So so these are the activity level controls which are designed for certain specific activities in the financial statement. uh, Points to be noted are, since entity level controls are pervasive, it may be more effective and efficient for the auditor to evaluate the design and implementation of the ELC, which is entity level controls, before evaluating the activity level controls. Obviously, auditor should firstly look into the financial statement as a whole, firstly entity level controls. If that is strong enough, if company have a good entity level controls, then it is not by default, but there's a high probability that activity level control would also be the strong, because firstly we will look financial statement as a whole only. After that we will see the transactions account and disclosures, right? So that's the point, like auditor should firstly focus on the entity level controls to understand and to gain the confidence over the controls present in the entity. Example, if the entity has a weak control environment, okay, it would render the ineffectivity any activity level controls in the that particular cycle. Therefore, though the auditor would obtain an understanding of these activity level controls, he may not want to test their operating effectiveness and rely on them, because obviously if any area in the financial statement I am taking the auditing the controls, I am evaluating the controls at the entity level, and I found that revenue is not in the good place. The controls for the revenue are not strong enough. So when I will reach to the activity level control, then I will not gain confidence over the revenues activity level control, and I will not rely on the operating effectiveness at the activity level control. So this is the human judgment, the professional skepticism that auditors use in the audit. Then now we will understand the preventive and detective control. So preventive controls are those controls where the misstatements are identified as they occur and prevent them for further processing. So it will be on the real time basis basically. So it preventive controls prevent the misstatements uh, is misstatement from happening. Uh, it is costlier to implement, but it is very much effective, and it is very much suggested to the clients to have the preventive controls in their organization. One of the example is like security devices are there in the company to safeguard the inventory. So any mismatch at the time of happening, it will automatically be controlled, it will automatically be identified and controlled at the real time basis. So these are the preventive controls. Now the detective controls are that we have to detect and then correct the misstatement after they have occurred and already entered in the system. So it is not a real time basis, it is on the basis of the audit that it has been identified once the data has been entered into the system, once the financial statement is created. then it is identified the detective, and then it has to be corrected. It is quite cheaper than the physical, than the preventive control, but still there are certain controls in the organization, which are detective controls and still in the present, and auditor needs to be more focused on such areas. Now, few things that we document regarding the understanding of the internal controls. So, key elements of the understanding obtained regarding the each aspect of the entity and environment that we have discussed, whose mnemonic was open. Each of the internal control components, risk assessment and procedures performed, identified and assessed RMM at the financial statement and assertion level, any significant risk identified and related to internal controls. Also, the form and extent of the documentation is influenced by nature, size, and complexity of the entity and its internal control availability. So, all these are the good documentation procedures that auditors should follow and document their understanding regarding the internal control in their audit work. So this was all about today's session of controls, that is entity and activity level control, preventive and detective control, and the documentation of that. I will see you in the next chapter. Thank you for staying connected. Let me know if you have any queries in the comment. For then, bye and take care.